早上好，欢迎。
Good morning. Welcome to this Caixin debate. My name is Wang Shuo. I am the managing director of Caixin Media. I'm very honored to be the moderator of this debate. And all the discussion will be conducted in English.
Editor of Caixin Media, and we are going to discuss One Belt, One Road, the global implications. It's a key issue with systematic impacts across the international economic integration process. Today we have very distinguished speakers. To my left is Danny Alexander, and he is the Vice President and the Corporate Secretary of AIIB, Asian Infrastructure Investment Bank. To his left is Mr. Zhang Tao. He's a Deputy Managing Director of IMF. In the middle is Minister Ahsan. She's a Senior Minister of Singapore, overseeing Ministry of Culture, Community and Youth, and also Ministry of Trade and Industry. To the further left is Harld Peters. He's a senior advisor to UPS Asia Pacific and incoming UPS China president. Last but not least, Minister Ahsan Iqbal. He's a Minister of Planning and Development of Pakistan. Welcome. Thank you for coming. We know that the key to the Belt and Road Initiative is connectivity. Connectivity along multiple dimensions among participating countries, including policy coordination, facilities connectivity, unimpeded trade, financial integration, and the people-to-people bond. It's a beautiful and ambitious vision, especially at a time when the whole world seems to be sliding into more fragmentations. So the question is, what regional and global partnership are required to realize a successful and inclusive One Belt, One Road initiative? So consider of your reply to this question as your opening statement. How about we start from the two ministers from the Belt Road countries? Minister Iqbal, please go ahead first, then Minister Singh.
Thank you very much. First of all, let me say that One Belt, One Road vision is a very powerful vision in today's world, because we see that after 8 to 10 years of the depression and the global crisis, the developed economies are still struggling to find growth path. And there is a slowdown in the global economy, and the demand is low. So if we have to go to the higher growth platform, we need more demand. Now, demand will only come from the markets. So if the markets are saturated, we need new markets. To go to new markets, we need connectivity. So this is a very powerful concept where through connectivity, we connect people, markets, produce new demand, and that leads to new growth. And in the process, it touches the lives of millions of people who are cut off from the mainstream of development. And that is what makes it very inclusive. In Pakistan, we started this journey in 2013 with signing of China-Pakistan Economic Corridor MOU under One Belt, One Road. And within 2 years, it has translated into a portfolio of about $50 billion. And what we are witnessing is that it has brought billions of dollars of investment in the poorest and the remotest areas of Pakistan, where it is making a big difference in the lives of the people. It has provided them connectivity through better road network, opened up areas. Hinterland is connected to the coastal areas. It is also touching their lives through socio-economic development projects. There is a new fiber optic cable that is giving digital connectivity to the remotest areas. And also, it has enabled billions of dollars of investment in energy that has enabled the economy to achieve highest growth rate in last 10 years. So we believe that such ventures of collaboration offer opportunity not for a single country, but for the whole region. We are at the intersection of South Asia, China, and Central Asia. These are still not very integrated regions, although all three are at the moment strong engines of growth in the region, in Asia particularly. So through CPEC, we have a vision that we will connect South Asia with China and China with Central Asia, and the three regions combined with a 3 billion population have a huge opportunity for the future growth of the global economy.
Thank you. Mr. Singh.
The Belt and Road is indeed a mutually beneficial initiative that we think is going to bring about many benefits through regional economic integration. Let me talk about ASEAN, which is the region that Singapore is in. And within ASEAN, there is a lot of optimism for growth. There are very good prospects for growth. At the moment, there are about 67 million households termed by McKinsey as being within the consuming class in ASEAN. And this number is set to almost double by 2025 to 125 million. This represents tremendous opportunities. This represents a lot of potential for connectivity, for more ideas, for growth. And I think that some of the very exciting partnerships that's going to come out from Belt and Road will center around connectivity. It will center around finance and infrastructure. And it may also center around working together, Belt and Road countries working together to enter into third markets. And in the case of Singapore, we are very happy that the third government-to-government project that we have with China is precisely on this theme. This is the China-Singapore Chongqing demonstrative initiative on strategic connectivity. And the base of operations is in Chongqing. But the project itself focuses on 4 areas that we think will contribute to the Belt and Road very significantly. So this includes cooperation in the area of finance, cooperation in the area of aviation, in terms of transport and logistics, as well as infocom technology. So we think that this partnership, I think, can generate a lot of very interesting demonstration projects. The Chongqing Connectivity Initiative is one that we are working very hard on currently. And we also welcome Chinese companies that are looking to invest along the Belt and Road to work with Singapore as a platform for financing, particularly for infrastructure projects.
And let's turn to our speakers from international institutions. Mr. Zhang Tao first, and then Danny, please.
Okay, thank you. First of all, of course, let me say that I'm very glad to be here to attend this summer Davos here in Dalian. And of course, I look forward to exchanges, views and thoughts with all of you innovators, policymakers, and other participants from all around the world. And of course, I would like also to commend the conference organizers to host this very important event. I would like to start with 3 remarks. The first remark I wanted to emphasize is that the Belt Road Initiative holds a very important vision. That is to connect economies around the world. So in a sense that the key words to me are openness and connectivity. We all know that the benefits of openness and connectivities were well embraced by participants at the Davos annual meetings earlier in January, and once again in the first Belt Road Forum in May. So I think that's well recognized, and what is recognized also is the strong need for further economic, financial, and social connectivities across countries. And this, of course, include very importantly, the financial connectivities, which I'm come back later on. But the bottom line is that the BRI, or Belt Road Initiative, has the potential to strengthen cross-border dialogue and foster multinational cooperations. And to many of us, this is very important in today's increasingly interconnected world. And this is, we should say, even more important than ever in the next few years and decades. The second remark I want to say is that now the question is how to best and fully reap the benefits of this Belt Road initiatives. From the IMF perspectives, two issues are critical. Number one, we will try to get macroeconomic policies right in the first place. Why? Because right macroeconomic policies means a sound and stable policy environment that will help and strengthen business confidence, foster business activities, and support demand for cross-border business transactions. And we all know that this is backbones of the economic growth. And two, infrastructure project is of fundamental importance. We all know that. And we also know management of these infrastructure projects, particularly cross-border infrastructure projects, can be a tremendously challenging. So this required a very good governance that will have to make sure all of these infrastructure projects are financially viable, or that the recipient countries have adequate institutional and management capacities to manage them. So these are very much important. So the third and final remark I would like to make is that we at the IMF has shown over many decades that we can act as a catalyst for investment. And of course, we provide our policy advice, we provide financial resources, we also provide capacity development through our training and technical assistance. And just last month, we worked closely with the People's Bank of China. We made an announcement at the Belt Road Forum in May that we established a new China IMF Capacity Development Center. And one of the Capacity Development Center's facilities is located right here in Dalian. So I recall we also had another training and capacity development center in Singapore as well. So these are the effort we try to work with our membership countries, and our hope is by working with our memberships, including, of course, countries like China and Singapore, Pakistan, and so forth around the regions, we will try to maximize the benefit of this Belt Road initiative. Let me stop here for the moment.
Thank you, Zhang. Danny.
Thank you, Wang Shuo, and thank you very much for putting on this panel. Let me start by saying One Belt, One Road is a very important initiative and vision. It's not just about infrastructure connectivity, but about building connectivity to support mutually beneficial economic development more widely. But as the AIB was set up last year specifically to focus on investing in infrastructure projects in Asia, I'll refer to that. What is the relationship between the AIB and One Belt, One Road? Well, alongside 5 other multilateral development banks, at the Belt and Road Forum for International Cooperation in May, we signed a memorandum of understanding with the World Bank, with the European Bank for Reconstruction and Development, the ADB, and others to cooperate on implementing the Belt and Road Initiative. And so there is a natural alignment between the AIB and One Belt, One Road. We're partners. But it's also important to say that the AIB is an independent, international financial institutions that invest in projects to support our members. All of our members have, like China, plans to encourage infrastructure investment in their own countries or amongst their neighborhood. All can submit projects to the AIB, and we will decide on which projects we invest in, independent of whether it's associated with One Belt, One Road or not, but according to our own standards and strategies. But turning to your question about partnerships to implement these visions, let me just suggest three. Firstly, of course, and obviously, it requires partnerships between countries. In the AIB's case, we were set up with 57 founding member countries. During the course of this year, we've agreed to admit 23 more members, including some in Latin America and Africa, as well as in Asia and Europe. So there'll be 80 members within the institution, and that's particularly important where you're considering cross-border investment projects. Secondly, partnerships between international financial institutions, because the scale of this challenge that One Belt, One Road, the AIB, and other initiatives like CPEC are trying to address is simply huge, and so collaboration is key. From the AIB's point of view, we've already co-financed many projects with the World Bank, with the ADB, and others. We have very similar standards in terms of environmental and social and procurement policies, but also the partnership is crucial to implement global agreements. For example, the Paris Agreement on climate change. All of the members of the AIB remain committed to the Paris Agreement, and sustainable infrastructure is a very high priority for our bank, and indeed crucial, I think, for all the countries to ensure green growth in Asia. And then lastly, let me say the partnership with the private sector is absolutely crucial to making a success of these strategies. According to some recent work by McKinsey, the financing gap for infrastructure in Asia over the next 15 years, $21 trillion. That is beyond the capacity of governments, of international financial institutions alone. And so mobilizing private sector investment for infrastructure in Asia will be absolutely crucial. And so mobilizing private sector resources is a key strategic objective for the AIB and for other international financial institutions and for many governments in the region, and it should be a key part of One Belt, One Road as well. And as a colleague from the IMF said, this also means having very good projects, it means having very high standards, it means being able to mobilize private sector resources in a way that they can have confidence in their investments. So partnerships with countries, with IFIs, and with private sector are all vital. And this is important because the success of these strategies to invest in infrastructure and promote connectivity will be absolutely key in determining the prosperity of Asia over the next 15, 20, 25 years, will be key in terms of seeing how international economic integration continues, and will be key to tackling climate change as well. So the stakes are very high, and so it matters that we work together in partnership to make these ideas a success. Thank you.
Thank you, Danny. Minister Iqbal, you just mentioned the China-Pakistan Economic Corridor. It's a giant project, and I would argue that it also embodies the whole initiative. There are a lot of hope, there are a lot of benefits, but also a lot of challenges. The corridor travels a lot of area, challenging terrain. So what could be done to push this project even further down the road?
I think when you implement a project of this size, there are a number of challenges which have to be addressed. And I would say that there are actually many gaps that we have to proactively address. First and foremost is the coordination gap, because when you undertake an initiative of this size, there is a coordination not only of stakeholders within the country, but also with the external stakeholders. So we have a very strong steering mechanism through which we coordinate with external and internal stakeholders. And over the last 2 years, we have had over 50 ministerial meetings, which I chair, and through which we are able to cut through the red tape and the challenges of coordination amongst different ministries. So that is one very important element. The second gap is the knowledge gap that does not allow many local businessmen to also fully appreciate the opportunities that will come. So we have adopted a very proactive approach of partnering with the local chambers to create a greater awareness about the opportunities that exist. The third gap, I would say, is the human resource gap that we also have to address, that while these opportunities come through infrastructure projects, through energy projects, you require different kinds of skills in the market, and they are not there. So we have very proactively now beefed up our skill training programs, the human resource development programs, so that this can be smoothly executed. There are also challenges in terms of different regions, where different regions have aspirations. When we started, there were many problems with different provinces. They all wanted to have maximum share. So again, we had a very inclusive approach wherein we brought every region into it and showed them that how these fundamental infrastructure projects will bring dividends to everyone. And now there is complete unity, harmony. Actually, every region is now competing with other regions to have greater opportunities in one belt, one road. So having open information, having better coordination, making sure that human resource does not impede the progress of the work, and taking everyone along, I think, provide good opportunities for effective implementation. And lastly, I would also like to emphasize it's not just the economic links, it is also people-to-people links that as a result of this initiative are giving us new opportunities. For example, Chinese language has now become the most important, second most important, and the most sought after language program in Pakistan. So it is, a fashion. Everyone wants to learn Chinese language. We have highest number of students now in China, probably after any other country, which have come here for studying Chinese language. We see that there is a fusion of Chinese and Pakistani cuisines which is taking place with more Chinese workers there and Pakistani people coming here. So this people-to-people, I think, dimension is also very important.
Yeah, so it's a multi-dimensional connectivity. And now let's hear views from the business. Harld, please.
I was afraid that we have a Belt and Road initiative without business, which might not be totally successful. As UPS, we've been following and participating in the Belt and Road Initiative as a global leader in transportation and logistics and a facilitator of global trade. I would like to commend China on their vision to connect Asia to Middle East, Africa, and Europe. When you look at the participating BRI countries, you see that a number of them is highly landlocked. And we feel that investing in infrastructure and subsequently infrastructure networks and logistics networks will help to lower transportation costs overall and reduce time in transit, which will bring the benefits of cross-border trade and globalization to the local economies. I think most of you have heard these numbers, but I'm going to repeat them nevertheless because they're astonishing. BRI countries in total have 30% of the world's GDP, have 70% of the world's population, have 36% of the manufacturing trade, and I think the bilateral trade between the BRI countries already totals $962 billion. Just to put that in perspective, that is the total GDP of Singapore, Vietnam, Peru, Kuwait, and New Zealand combined. Or, to give another example, slightly less than Mexico as a whole. For us, BRI is here and now. In our first quarter earnings call with our investors, we let them know that China export volume grew with an astonishing 30%. And in a broader perspective, Asian-Pacific volumes grew with 10%. For me, it clearly underlines the need, but also the opportunity to further connect Asian-Pacific to the rest of the world. We as a company already see in the development of our networks that there's a close alignment with BRI. We've added very recently 6 stations to our multimodal rail service network between China and Europe, which enables customers and manufacturers in China, a city like Chongqing or Wuhan, to directly ship to cities in Poland like Lodz or Warsaw, or further beyond to Duisburg and Hamburg in Germany, and from there to the rest of Europe. What we hear from our customers is that comes with significant reduction in time in transit and or in cost, up to 65%. I want to leave you with one experience that we have as a company. Every successful trade agreement leads to an increase of more than 20% in our express volume. So it's worthwhile pursuing.
Thank you, Harld. Zhang Tao and Danny, financial collectivity is a very important part of the initiative. But along the Belt and Road countries, they are actually at very different stages of financial sophistication and development. So what kind of innovation in finance arrangement are needed to promote the financial connectivity and the financial inclusiveness among these countries? Zhang Tao first, and then Danny.
Thank you. Thank you. That's a very good question. Let me first say that financial connectivity is one of the main pillars of the Belt Road initiatives. There are a couple of reasons behind it. Let me explain a little bit from my perspectives. The first one is we all know that greater intra and inter-regional linkages among financial institutions and capital markets are necessary or are necessary conditions for developing a growth-supportive trade sectors. So, in a sense, is what for the trade sectors, this is the necessary conditions. And second, the enhanced financial connectivity can promote cross-border investment and increase financial market liquidities, reduce the cost of capital, and improve capital allocation. So these are how the market mechanism works. So most of the people understand that. More importantly, coming to aspect that if you have a strengthened financial connectivities through technology, for example, through fintech, we have observed in most recent years that can promote financial inclusions. Here's come to the question you raised. How we can do it? This is will improve the provisions of the access to financial services for those people who normally cannot have these financial services, so-called unbanked populations, in many of the developing countries along the Belt and Road. And of course, we can explain a little bit more how that can be happened. For example, we normally find that the access to cross-border payment technology and the payment system has been approved for particularly low-income households. So, and of course, if people can work together by putting in place the financial literacy programs to those, normally unbanked population, that will also help them to get access to financial services. And of course, you see many countries nowadays, not only in this area, but also in Africa, Tanzania, Uganda, Kenya, they all have this, quite rapidly developed so-called mobile banking system. So these are the things which increase people's, confidence that can help to reach the better and stronger financial inclusions. But having said that, we also observed because of the openness of the and strong connectivity in terms of financial transaction across the border, we have to be aware of the stability and the regulatory implications of this new so-called fintech, either technology or services. But that has been said, if we correctly address the issues of these implications, then we are more confident to take advantage of this, fintech, new technology to help to reach a greater degree of the financial inclusiveness. I can go on, of course, there are other advantages, but again, all the things have issues to be concerned. In other words, to maximize the benefits of all these financial connectivities, we have to be mindful that there are some risks or challenges we have to to address. What are these? I think I'll give you an example, just name a few. For example, we've seen from some of the countries in our experiences that the vulnerability to adverse external shocks could increase with the growing concerns or reliance on external financings, and particularly in the event of the larger cross-border claims happens. And second, of course, in any of the societies, might be different views, different reactions to all of a sudden the financial flows coming into town. So there might be concerns that the too much finance too soon, vis-a-vis the existing financial supervision capacities or the rate of the monetary and exchange rate regimes. So these are the things we have to consider, put them together, make sure that financial connectivity can actually produce the targeted benefits as we envisaged, rather than facing the unintended consequences. So I have to put it together to think about it in a more comprehensive way.
Thank you. Danny.
Thank you. Let me just make 2 points. The first is that for developing countries in Asia, there's an opportunity to leapfrog from established or old-fashioned technologies to the more modern ways of dealing with financial connectivity, financial inclusion, and in many other aspects of life as well. From a personal point of view, I moved from the UK to China a year and a half ago. Since then, I barely carry cash in my pocket because almost everyone accepts WeChat as a means of payment, as most of the Chinese people in this room would know. That is much more sophisticated, actually, than the payment systems we have in the UK or in other European countries. And that's an example of how leapfrogging to more modern technology, exactly as was being said, can also help to promote financial inclusion. It can provide people with a way of making payments that are free of risks of fraud or bribery and those sorts of difficulties, as well as just being easy to use. From the AIB's point of view, we're obviously a project finance institution, and so our interest in this comes from that perspective. But certainly, if you're looking to try and attract private sector investment to infrastructure projects in many countries, particularly those countries that have very little capacity to absorb debt in the public sector, then really private capital mobilization is the only way to deliver the infrastructure that you need. And that requires a number of things. It requires good, well-structured projects, which, as the Minister Iqbal was saying, requires capacity building in many places. It requires stable policy frameworks so that investors have some confidence that things won't change under their feet after they've decided to invest in a project. It may require, in some cases, some degree of political risk insurance. That's one role that a multilateral development bank can play as being part of the financial structure of a project. And just to say, from the AIB's point of view, we're still an institution in our relatively early stage of thinking on this matter. We're working very closely with the private sector to try and determine what's the most useful roles that our institution can play, what are the right products that we can develop to really help to encourage more private sector investment into infrastructure in developing countries in Asia and across not just the One Belt, One Road, but far beyond. But with the idea that in the end, if infrastructure could become seen as a tradable asset class, then that would help to encourage much greater levels of private sector investment.
Thank you, Danny. We are talking about innovation, but to be honest, no innovation will have meaningful impact without first thinking about policy coordination among countries first. So I have a question for two ministers. So just give me your wild thinking. How do you envision the future innovation in this area, this policy coordination among different governments in the Belt and Road Initiative? Minister Sim first, please.
Well, in the case of Singapore, I would say that we value having frameworks, but at the same time, we also see the value of moving ahead with experiments and also moving ahead with demonstration projects. So I think in this connection, what we are working on right now in terms of the Chongqing Connectivity Initiative, we hope will bring value to the Belt and Road. Let me explain a little bit about the role that we hope to be able to play in Belt and Road. At the moment, investments from Singapore account for about 85% of all investments from Belt and Road countries into China. And China's investments to Singapore account for nearly 1/3 of its investments into all Belt and Road countries. So we are very actively involved in Belt and Road. And we think that, for instance, some of the innovations that could come out from the Chongqing Connectivity Initiative involves the Southern Transport Corridor. We envisage a Southern Transport Corridor from Chongqing through Guangxi into Southeast Asia and to Singapore. And this is a transport corridor that can join up both the Belt and Road and make innovations in terms of transport and logistics. And I think this is one way in which we can strengthen the content of Belt and Road. So at the same time, we are already seeing a very good progress in terms of the aviation links as well as the financing links that are coming out from this particular project. And just to respond to the points that Mr. Zhang Tao and Sedani were making about financing, indeed, we think that to make financing for infrastructure very successful, you need to have a combination of very good knowledge of the markets along the Belt and Road. You need to have expertise that are able to help assess risks and also to bring together various financing partners, and also hopefully a good collaboration network with our multilateral development banks. And these are the factors that Singapore hopes will be able to present a very compelling case for investors that wish to engage in infrastructure financing as part of the Belt and Road Initiative.
Thank you. Minister Iqbal, please.
Well, I would say that in terms of implementation and how to innovate for good, speedy results, first and foremost, I think, is what holds true for any change management success. It is the ownership and support of the top leadership. It is absolutely necessary that the highest level support and ownership should be very visible and clear. In our case, it is the Prime Minister who has been personally championing the program, has been supervising, and at the ministerial level, I champion it. And that makes it very easy to break the red tape and put things on a fast track. The second important lesson from our experience is that governments have their limitations. Governments alone cannot undertake such big projects. So we have to open up and provide opportunities for private sector, for academia, research institutions, for civil society to also come in, and how can we create these collaborative spaces where we can pick up the brains from different sectors and have a collective wisdom to really maximize the value. I would also say that we also need to come out of the old straitjacket of looking at it as some kind of a development, cheap, concessional financing mode. There are many opportunities which can be done on very commercial basis. For example, Pakistan had an energy policy for many years, and people were reluctant to come there. We were facing 16 to 18 hours of power shortages. And what CPEC has done, it has connected Chinese investors with the Pakistan's energy policy. We have billions of dollars coming in where the investors are making decent 17% return over equity. And we are getting oxygen in shape of foreign direct investment that is helping us overcome energy crisis. So, how can we harness the private sector investment? How can we connect the opportunities with the external financing sources? So it should not just be seen as some kind of a development project which will require government-to-government intervention only. I think there are many opportunities which can be harnessed by connecting markets with the external financing in private sector mode, in public-private partnership mode, and that will give more value.
Thank you. Harld, we have heard so many insights, ideas, good ideas, and visions from our fellow speakers. But you are different. You are a businessman. You are result-driven. So what would you, and in a way, you are a customer to the whole initiative. So what would you ask for? What kind of concrete results, 1, 2, 3, you ask for coming out of this initiative in the not so distant future?
Thank you. So let me be the voice of customer. I'm not necessarily the big multinationals who are well represented at the World Economic Forum already, but the voice of the SMEs. I think Premier Li yesterday in his opening speech gave us an astonishing number. Every year in China, only 3 million SMEs are being established. For an SME to grow, you would like to have access to the global market. And to have access to the global market, you need to grow. And growth requires capital. And I think we have a number of people in the panel that can speak to that. The last thing you want to have as an SME is to have your working capital tied into inventory, and let alone into in-transit inventory. So my request would be to ensure that with the Belt and Road Initiative and the partnerships that are established or will be established, that we continue to serve the interests of the SMEs. It would be a shame if we have all this infrastructure being established, creating fast access into countries like Pakistan or Singapore, and then seeing goods stuck at borders. So for me, the request would be to combine both infrastructure with trade facilitation. Only when we combine the two, we'll be successful in the future.
Thank you, Harld. And now the discussion is open to the floor. So if you have any question, please raise your hand, ask your question, and identify the speaker you want to address this question to. And please ask a question. Don't make a statement, and especially don't make a long statement, please. Okay, the gentleman over there, the first aisle. Yeah, over there.
Hi, Li Wei from Caixin. So a question on financing for Mr. Zhang and Minister. So there is a question of financing, which is key. There is both a concern domestically and internationally for, say, China doling out money on many of the, say, financing initiatives. I'm wondering, on the Chinese side, how, say, PBOC and other Chinese ministries, together with the help of IMF, balance this giving, say, assistance or commercial financing to these countries, and also preserve kind of domestic macroeconomic prudence. And also on the Pakistan side, there is internationally concern about debt sustainability, the capacity to absorb kind of soft loans. So how do you look at your capacity at the moment, and how do you strengthen your attractiveness to private sector investment, as you just mentioned briefly, I think. Thanks.
Zhang, please.
Okay. Thank you for your question. I'm not speaking for Chinese counterparts, authorities, but your questions, if I read it correctly, is when providing financial services from one country to the other, basically across countries, you want to consider the balance between the domestic financial market stabilities and the sort of making use of the money is coming from outside. That's in general questions. I think this is a sort of long-term issues. There are always when you experiences a structural change, which normally in the past you relied on domestic financing, and you open up the door to cross-border international financial flows. Then always there's a case how to maintain the balance. And I should call it, this is a long-term process, and you have to make sure the market infrastructures will play the conducive role rather than play the other way around, setting up the barriers to that. And you have to make sure, like I made my remarks earlier, make sure that the recipient countries actually should have adequate regulatory and management capacity to support it. And you have to make sure the existing monetary and exchange rate regimes could be flexible enough to accommodate the large flow. And more importantly, of course, the recipient country have to make sure on the macroeconomics front, the financial, the incoming flow would not jeopardize the financial or macroeconomic stabilities. So with all of these, and of course, if that, all the things we talk about is there, then we believe the inflow of the money will provide a tremendous benefit to the recipient countries. So we're talking about here is, yes, the concept, in terms of the concept, in terms of the beliefs, the openness, financial connectivities, is a good thing to do. But, and you need to address some of the issues which I just outlined a moment ago, in order to reap and fully reap or reap more effectively of the benefits while addressing the risks associated with the flows.
Thank you, Minister.
Well, I think the first and foremost is, as Mr. Zhang also mentioned in his opening remarks, that host countries have to attend to macroeconomic stability. If you do not have macroeconomic stability, these opportunities will have very limited potential to contribute. In 2013, when we came into government, our deficit of the budget was over 9%. And in 3 years, we have cut it down to less than 4.5%, more than half. 3 years ago, the reserves were dwindling around $10 to $12 billion. Today, they are $22 to $23 billion. They have more than doubled. 3 years ago, the tax to GDP ratio had dropped to less than 9%. Today, it is almost 10.5%. So we have tried to address the resource mobilization through tax collection, cut down the deficits, brought stability, the reserves have improved. So that, I think, provides us the platform on which we can move forward. Similarly, the debt to GDP ratio, instead of increasing, has decreased. It is less than 60%, which was about 62% 3 years ago. So therefore, with strong macroeconomic fundamentals, we don't have any fear of debt sustainability. And also, we have recently achieved 5.3% growth rate, which is highest in last 10 years. So if we continue on 6 to 7% growth platform, we will be very comfortable meeting these obligations. Now, in terms of private sector investment, I think Pakistan is a 200 million population, 2/3 is young population, 70 million plus is middle class. Now, there are not too many European countries with that kind of, size. All these people want to have good quality of life. There is no private sector which has a global ambition can just ignore to overlook this market potential. So we are very attractive with this macroeconomic stability, and CPEC, which is addressing two bottlenecks, energy and infrastructure. All these investments are going into opening up the infrastructure and the energy bottlenecks. We are seeing that now new investment is beginning to come. Recently, a Dutch company made an acquisition of more than $400 million into a Pakistani company. Now, if CPEC was not there, I don't think that this would have taken place because, all this investment is bringing health to the economy and giving people greater confidence in the future opportunities. We are seeing many automakers now. Fiat is coming and setting up a plant in Pakistan. Many Chinese automobile companies are coming in outside the scope of CPEC. So the private sector is coming in with a very liberal investment policy we have. There are no restrictions on remittance of dividends. So I think we will see more and more of private sector investment come in because there are huge gaps still where private sector can come and fill those opportunities with the fundamentals that exist in Pakistan.
The gentleman over there.
Thank you. My name is Zhang. I'm from Swiss Re Corporate Solutions. We're an insurance company offering all kinds of insurance solutions for the One Belt One Road. We actually work with the AIB right now. My question is on the private sector investment. I think you all mentioned about you asking or you hope there'll be more private sector investment. But when do you think that will actually happen more and more? Because I think the people need to feel the change. At the beginning of the One Belt One Road is about infrastructure, it's about transportation. And then you will see probably more trade happening. And then people will see the real benefit to their individual life, the standard of life will get improved. So I'm just asking the panel, when do you think that people will see the benefit and you see the more private sector joining in? It's going to be 2-3 years from now, or it's going to be 5 to 10 years?
I'm sorry, we may not have time for the whole panel to answer this question. So please address this question to one speaker. Which one? Okay, please.
I think I can't speak for the whole panel, but I will on this occasion. No, I think you're already seeing it happen, actually. I mean, certainly from the AIB's point of view, we're seeing a lot of private sector sponsored projects coming forward in many countries around Asia. A couple of weeks ago, we agreed our first private equity investment in a fund in India, which will mobilize an awful lot of private sector capital. But I think it varies from country to country, basically going back to the issues that have been raised by other panelists to do with macroeconomic stability, to do with the stability of policy frameworks, to do with the capacity of those countries to deal with private sector investors. And so one challenge is to, which is, for all of us on the panel, is to try and make sure that the right environment exists in all of the member countries to enable private capital to be mobilized to the level it needs to be to turn what are very, very, very ambitious goals, with a huge financing gap between the ambition and the reality, to turn those goals into a reality over the next 10 to 20 years.
And may I just say one word?
Sure.
I think the benefit just go like instant coffee. There are instant benefits. When the energy power project is completed, when the power shortage is reduced from 16 hours to 6 hours, people can run their businesses, they can work more hours, their incomes are secure, their schools are better, their hospitals are better, and it touches their life. When a road is open in, for example, Quetta to Gwadar, where it used to take 2 hours to travel, and now they travel in 8 hours, and some of the remotest areas have access to markets, have access to fertilizer, have access to better supplies, their agriculture productivity is going up. It's an instant benefit. So openness, connectivity, energy, this is all bringing instant benefits to people. It touches their life.
Thank you. Next question. Which one? This gentleman.
Thank you. Looking for anybody volunteered on the panel to answer. My name is Michael Wang from international law firm Baker McKenzie. So forgive me for being a lawyer and asking sort of an annoying question. It is a massive project with massive opportunities, but variously with all these different players, you're going to have some differences of opinion, some conflicts that arise in connection. Is your institutional framework of how do you resolve differences whenever you have individual agreements and all that, or is that sort of left ad hoc to the various players as we go along?
Since we have only 3 minutes left, so I will use my privilege as moderator to pick just one speaker to answer your question. Minister Sim, how about you answer this question?
Well, actually, I was thinking that because our 2 speakers from international institutions have been talking quite a lot about framework, that this might be a good opportunity for them to elaborate on their views.
Okay, good point. There's democracy here, so I will concede. So, Zhang Tao, please.
Okay, I can, very briefly, we have this dispute settlement system around the world. For example, WTO is one. And certainly people have a complaint or views on the practice. But I think generally, that's what we observed at this stage. We have the multilateral international system, including the one like represented by WTO, working on the trade, for example, the settlement. And that's, I think, right now, that's the best way we go. And that certainly will also apply to whatever involved here in the BRI, the project or activities. I don't think we are sort of searching for something which is vacant. It's there. Yeah.
Daniel, would you just add a quick point?
Just one point, which is I think this question goes to the heart of the current debate about globalization and the way in which the international economic system works, because multilateral cooperation based on rules creates the opportunity for that kind of dispute resolution, for countries to cooperate in a way that is commonly understood and agreed. That's what the IMF is, that's what the AIB is, it's what the World Bank is. And I think that the plea would be, let's find a way to ensure that we continue to develop and enhance those multilateral frameworks as the One Belt, One Road develops, precisely for the reason that you suggest.
Thank you. I think it's a beautiful answer. And with this, our time is up, unfortunately. And please join me to thank our distinguished speakers for their insight, for their vision, and for their plans. Thank you. And thank you all. See you next year.